Today I'm going to go over your three threes for the week. I'm going to go over our top 10 major asset classes, their performance and how we're positioned. Then I'm going to look at the chart of the S&P 500, our support and resistance zones. Then I'm going to look at our top three market movers for the week. So let's dive on in. Okay, let's go to the top three headlines from last week. The three major U.S. large cap stock indexes posted weekly gains in the NASDAQ and the S&P 500. Both outperformed the Dow for the week. Although the mid cap and small cap significantly outpaced its large cap peers. However, the S&P's positive momentum over the latter half of August wasn't enough to offset its declines earlier in this month, and the index fell 1.8%, snapping a string of 5 positive monthly results. Energy was the only sector among the 11 to produce a positive monthly result, while utilities posted the biggest decline for the month. On Thursday, the PCE index, the Fed's favorite preferred gauge for tracking inflation, showed that the consumer prices edged up higher in July. The price index rose at a 3.3 annual percent rate, up from 3% in June. When we exclude volatile food and energy, core inflation climbed 4.2 versus 4.1, so that pendulum now is swinging and going back up the other way. We shall see what happens next month. On Friday, the August monthly U.S. jobs gain of 187,000 exceeded the downward revised figures for June and July. The longer trend now points to a slowdown, as August totals were well below the monthly average of 271,000 jobs over the past 12 months. And not only that, but the payroll growth for June and July was revised down by a whopping 110,000 jobs, portraying a much weaker picture of unemployment growth over the summer than what we originally had thought. All right, let's go over the top 10 asset classes, their performance, and how we are positioned on a short-term basis. There were only a couple of changes. The S&P 500, NASDAQ, and gold switched back to being bullish on a short-term basis. Again, that's under 3 weeks. On an intermediate-term basis, looking out longer, there were no changes. We remain bearish on bonds, international equities, and gold. All right, let's take a look at the S&P 500 and its support and resistance zones. We are right dead in the middle of the latest resistance zone, sitting at 45.15. We should probably trade in here for another week or two as we finish up earnings. Then we get to the tough part of the year, September and October. So to be very curious to see if we break up or break down into those other zones. All right, let's go over the top three market movers for this week. Wednesday, we have the U.S. Services PMI, and that's the non-manufacturing index, and it's projected for this month to come in at 52%, down from 52.7 last month. Also on Wednesday, we get the Beige Book, which is the overview of the U.S. economy, and it's published 8 times a year, and it reflects the economic conditions across all 12 Federal Reserve districts. The latest issue could describe an economy that either remains robust or not, despite all these headwinds that we have right now. On Saturday, we get data out of China, and it's their CPI figures. And this could be critical because it's the world's second biggest economy, and it looks like it's falling into deflation, with the consumer prices now falling 0.3 from a year ago, which is very important because if they're facing a slowdown due to debt, exports, property bubble busts, and high youth unemployment, will that spread to the other economies of the world? We shall see. All right, that's it for this week. Thank you for joining us. Our next update is Monday, September 11th. As always, continue to subscribe, like, and follow. And we shall see you back in the United States next week. Have a great week trading.